Mic on. All right, guys, welcome back. Let's get started. Let's see what's going on in the markets. VIX broke down from this upward trend line, and oop. Take it easy. It's okay, Manolo. I take care of it. But we're still in an uptrend in the VIX, right? So, yes, this trajectory, we wanted to see it to go continue up, but that's not the case. So, all is not lost for the bears. All right. So we tested the previous high, pulling back from it, broke down, crossed the line. But again, this is the ultimate, the ultimate line down here. All right. So anything above 32-ish is good. All right. A little bit of a move in the market. Let's take a look at it. And we'll just go to the core stuff. You saw that the S&P has moved up back towards the POC. And let me just confirm that from the previous low, actually not even close to the POC. Let's see from here. 1 second. All right. So there's 2 points we want to measure, right? The top here, right, when it started to fall apart, where's the POC? It's all the way up here, 3409. And then the second one you want to measure is from the low. All right. So that's the low. So not even close to the POC. All right. So then we wanted to take a look at the last 2 days. And where is that? $19. What the hell's going on here? What's going on here? This is the 20th. No. All right, here it is. It keeps jumping. 1 second. What time is this? 10. Close enough for government work. All right, so it's above the 2-day POC. All right. So price now is outside of the 70% range. All right. Nice little push up. And I thought we had this one drawn out. I don't know how that works, but nice megaphone structure. And then the structure within it. Now remember, this is a minute time frame, huh? And this is the within it. Okay. So a very funky looking megaphone pattern of confusion. POC is down here. Outside of the POC, try to break out, failed, pushing right up against this resistance area. We are clearly in a verified 1, 2, 3 up within a structure within a structure. Right? Okay. Nice little push up. So now we're going to see how it's going to close today. Let's take a look at the Nasdaq. Broke out. Remember we were talking about this, right? That this was enough of a hook to measure it, whatever. And then what happened? As soon as it crossed the line right here, boom, took off, right? Now it's racing towards the top. All right. Right up top here is the next resistance area. Clearly outside of the POC. We still have this P formation. All right. Still have the P formation. So it found open waters and just ran up. So taking a look at the bigger picture, still coming up to this resistance area right up here. All right. And obviously the Nasdaq, with the big tech after hours reporting, there's going to be a lot of degenerate gamblers that are very excited to place their bets. And guess what that bet is going to be? Bullish, of course. They've been trained, groomed to do this. Okay. Let's see if they're right. Certainly the channel is there, right? The channel is there. So you end up with a break of the bottom, a break of the top, and then we'll see what happens. That's a possibility there. The channel certainly does have to correct at some point to the upside. I don't know how long, it can run or whatever. It can run all the way to the top here, right? There's many uh, scenarios that we can play out. But again, that's a possibility, not a probability. The probability within this structure is that it fails up against resistance. All right. Taking a look at the point of control from this morning, right about there. Okay. Um, way above it. Way above it. Again, P factor. Now remember yesterday when the market was closing, we had this building up here, right? Remember that? And then I said, look, it has to have the this part has to get filled in, right? Doesn't have to be a big fill in, but it has to explore that area. And that's what happened into the close. Then it bounced, came back, tested this area again, filled it in a little bit more, and then off it went. Let's take a look at small caps. Small caps have broken out of this channel. We had identified this morning and during the lunchtime hours. All right. Would I take such trades? No, absolutely not. I would not take these trades. And the fact that you can see them doesn't mean that you have to trade them. Remember that. That's very vitally important. Uh, because if you start taking them, every single thing that you identify, then you're going to end up somewhere where you don't want to be. You're going to end up trying to chase every single move in the market. And that's not what you want to be doing. You want to take the nice high probability trades. So remember that. Give me 1 second, please. All right, sorry, I'm back. So let's take a look at transportations, up 2%. Okay, it broke the previous high from yesterday at the open. The fangs back in the middle of the structure of this bear flag. And what else? China's in the middle. Germany, little bit of a pop. Okay, but again, bear flag at the point of control. All right. Again, that confusion megaphone. Confusion megaphones are designed to trigger feelings, right? Emotions. It's confusion. The bulls are going to see it as bullish, and the bears are going to be scared because it's not doing what it's supposed to do, and it's not doing a very good job of what it's doing, and it ends up in a very weird kind of deal. Okay, so you've seen a lot of that lately. UK structure below structure, building pressure. All right. Let's see what oil is, a dollar, real quick. Dollar pulling back a little bit, but it has broken out, and we just need to see this hold. If it holds tomorrow, then you have to be dollar bullish, and if you're dollar bullish, that means that you should be bearish. Okay. Now you can make an argument that Europe is shutting down, and U.S. doing better than Europe, but clearly that's not the case, right? The fact that we haven't shut down yet doesn't mean we won't. All right. We're projecting 100,000 cases per day. Soon the death rate will start to climb. It's going to be interesting to see how much it climbs, right? How much have we improved in um, in medicine, in dealing with it? It's also going to show how ready we are in terms of the healthcare system to deal with high volume, right? Um, Now there's going to be parts of the U.S. that are not going to deal with it very good, obviously, right? Ooh, look at what is going on here with the lines. So yeah, um, and that's a big factor. If you don't have the ability to deal with the cases, even though if you can treat it, well, what good is it, right? There's no room. There's no room for people. All right. So anyway, number of ways you can look at it. We're going to stick with what is the more probable, and that's that there's fear in the market. People are going to buy the dollar versus um, stocks. Okay, a flight to safety. 10-year. Remember, the 10-year has been rising, and it continues up back to 0.833. That's very interesting to me. I am so interested to see what this is going to do. Because again, when interest rates rise, right, that puts pressure on earnings yield, and if earning yields are quite low, well, that's bearish for stocks. Okay, so remember that. Um, if we were to draw a line for the 10-year, the resistance would be somewhere around 0.94. And it's not like we haven't been there before, right? 0.94. All right. So let's get back to the trading aspect of it. And remember, I keep these lines in here for you guys, okay? Mostly, so you can see how it played out, what happened. We're shrinking to a small time frame within a minute, but the same rules apply. Nothing changes. All right. It's very important to understand that. It's a little bit messy, so I'm always conflicted. Should I keep it there? Should I not keep it there? I don't know. Um, but it kind of illustrates the point. All right. So this particular does not start from the bottom here. This line. That and I don't want to say it's an exception, but what are we trying to do with structures, with waves and structures? We're trying to capture the essence of the move, right? So in this case, even though technically it's not a valid, um, the anchor point is the B here. That's where it bottomed out. Okay, it's a tight, tight, tight. So you're not expecting to see waves within the tight, tight, tight. So you don't have to be technically correct on this one. Okay, tight, 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 tight. Boom. Okay, that's what we're looking at right now. It doesn't have that other feel to it, right? Where you see the whole structure, it's wavy back and forth, and it has nothing to do with that, right? It's a particle move. It's a tight, tight, tight. Okay, and eventually this typically resolves to the downside. So S&P 500 coming back. This is more of a wavy. This is more of a structured move. Clearly, this is a valid structure now, right? It's a structure within a structure that tried to break out, failed. It failed, and now coming back down to test it. What is going on? Heather. All right, there we go. All right, there it is. It's a very nice structure set up. You can tell that we are in an area that it's, in terms of today and yesterday, that it's not very comfortable, right? You still have the P. You still have this void here, okay? So a break back down to point of control, very likely. But again, understand the difference. Within the structure, the bias is to the upside, at least for one more, maybe a double top, maybe whatever. Okay, you got to wait for this to break. And once it breaks, then you look for the point of control. The fairest point of doing business. Reading the markets, guys, you have to do the work. You have to go through all these indexes. If you can include more, include more. There's nothing wrong with that. But um, what is the message of the market, right? That's number one. What is it doing longer term? Start with a monthly, weekly, daily, then move down to 1 hour, 1 minute. Okay, you don't have to do it all at once, but have an idea, right? The monthly is not going to change. The weekly is not going to change, right? So pay attention to that. Okay, start like that. Second thing is you want to see what the message of the market is relative to other indexes. Okay, what is the net effect of it? All right. The next thing that you want um, to think about is the volume profile. Right. That's another way to look at it. It's like an X-ray, right? It's like a what is that? MRI, right? The contrast. You move it up and down. You dial it up and down, and so forth. Um, that's important. It's important. Okay, it gives you that knowledge. Very important. And then, of course, you also want to consider that moving average. For some reason, it disappeared. I don't know why, but anyway. All right. So the moving average. That's why it disappeared because it's so far away. It's so far away. All right. So now it's flattening out clearly. Right. 63-day moving average. That's a quarter. All right. And it's flattening out. We're way, way, way below it. That's not necessarily a good thing. All right, that's bad, not good. Um, Again, I'm going to point out that the target for a potential pause or reversal somewhere down here. All right, we never lose sight of it. Don't become a victim to whatever the market is doing, whatever price is doing. That you're going to start reacting. Oh, it's bullish, it's bullish. No, 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 no. Don't do that. I see so many guys do that. Remember, price is an advertising mechanism. That's it. It's just advertisement. All right, please, Habibis. All right. So here we are back. Let me get rid of this. It's 320. Let's go through the indexes, see what's going on. S&P Dow is up 0.9, S&P is up 1.3, Nasdaq 2%. Degenerate gamblers. Small caps 1.1%, transportation up 2.3%. Remember, this was the laggard yesterday, right? And today it's leading on the way up. And the FANGs are up almost 3%. It was down more than 4.5 yesterday, I believe. And today it's up. So again, it's just volatility. All right. In a lot of ways, what the earnings of these big companies is far more important than what the Fed says. What's the Fed going to say? We are going to adjust our tools as necessary, to meet demand. We have plenty of ammo, blah, blah, blah. There's nothing there. What people care about more is, how are the earnings, for those big tech companies. All right, so now we have this pattern. And this is, again, a very nice illustration that you want to go long, that's fine. That's fine. 2 points down here, right? So the risk reward is if it pops back up, you stop out. If it breaks, you get a move to the downside. Not that big, but at least, let me do this right. You would get something like this, right? So the risk reward, and this is not correct either. So if it did this, right, then you stop out. You stop out, and then you have this much risk and then this much reward. Okay? It's just a risk-reward play. That's it. That's the whole point of bare knuckle charting. All right, so let's get rid of this. And the other point that you want to take as a good risk reward is a break from this structure, right? So 1, 2, 3 down, completely valid. Hook, everything, whatever you need is right there. So you can count it. First counter trend move, down, correction, down, 3 points, hook. All right, you got your 4 points, 3 waves, 4 points, valid structure. Pushes above this. Your risk is very defined. All right, if it breaks, this is in here somewhere is your risk. And this is your potential reward. All right. And that's the way you would trade that. Depends on your risk tolerance. You know, some people are more risk averse, others are less. It all depends. All right. Good. So I'm hoping that you guys are starting to get a feel for bare knuckle charting, getting a feel for not guessing. Somebody, told me today, oh, I did this, I sold out of this or whatever it was. Fine. Okay. Based on what? Well, was it charting waves? No. Okay. So why'd you sell? Vague hunches and feelings, right? Can't do that. Um, can you short here? Absolutely. Of course you can. There's nothing wrong. You can go either way. Remember, it's a risk reward. Okay. This is a risk reward. You decide. Okay. Do you want to take this to the downside? You can do that. Your stop is up here. And in some ways, this is more clearly defined, right? Than the long side. All right. Another thing to remember: just because it completed a 1, 2, 3 does not mean that the next move has to be down. Doesn't have to. The waves identify the structure, validate the structure. That's it. That's it. It doesn't mean that it's going to be 1, 2, 3 up, up. Now it's going to go straight down. No. Does it do that? Often it does, of course. Of course. But it doesn't mean it will do it every time. See now how it's building that consolidation near the top, right? These are small, subtle things, but again, like an MRI, a chest X-ray, the subtleties matter, right? Look at that. See it? It's building that pressure right in here. That's good. That's bullish. Okay? That's what you want to see. It can happen at or just above it. It doesn't matter. It's the same principle. So what we can do for fun is mark it. We'll take it to the long side. How about that? All right. Once it starts to break, see, a break of a line under these circumstances is okay. You can take it. A break of the line, let me show you. A break of a line like this is not the same, right? It's just a break of a line. That's the way I would define it. There we go. Let me just mark this real quick. Long. There we go. Bring this down a little bit. Maybe a little more. Okay. A little bit more. Right there. Okay. Yeah. Why? Why does this breakout matter more than the other one? Well, the reason it matters more is because it already had that consolidation right in here. Right? You have that pressure, that build. It broke out. Okay, so that can run. That can run. If it's just a straight up shot across the line, it's not the same thing. All right. And this is the potential, right? The potential reward. Any questions? Yet. All right, let's see what. Don't forget to do this analysis as well, okay? There's a number of ways you can do this, but I use this one. I think it's simpler, but there's other ways you can do it. Just understand what the market is doing. So communications are leading the way up by 3.29% today. For whatever reason, they're very excited. Materials, 2%. Energy, 2.5. Laggers, healthcare, consumer, staples, and utilities. All right. Information technology is in the middle of nowhere. But at least it looks a lot better, right? Utilities at least are, and financials are towards the bottom. At least. So that's something. All right. So we broke out again with kind of a F flag-ish thing now, right? It's kind of like an up F flag formation. All right. Let's see if it holds. Now, remember, if it stops out, which it's probably going to do, right? You don't want to fuck around. You don't want to give it no leeway because look at this. Look at that. It's a big fucking void. All right. It's a big void. So if it stops out, done. Don't give it a single tick more than you have to. So now what's going on? Well, oops. The structure is violated. So now it's just chaos. It's nothing. Garbage. Whatever it's doing, you nor I know. 1 second, I have a telephone call.
Mic off. Mic on. Mic feedback off. Mic feedback on.
All right, back with you. All right, so it's 3:30, and 30 minutes left to trade. VIX, okay, kind of holding down here. Nothing new there. Equal weighted ETF bounced to the previous day's open, which was the high, falling back down. Trying to build a little bit of a base here. All right. Nothing exciting. All right. Nasdaq. All right. Nasdaq kind of broke as well, right? See it? So let's see how this behaves. We'll stick with the S&P 500 for now. All right. Cool. Anybody have any questions? See, again, it crossed the line and it's kind of doing a structure above a structure in a sense. It's building pressure again, right? See it? So it's got to resolve at some point. Wow, Netflix jumps. Okay, so that kind of explains it, right? So shares jump 5% on Netflix. Let's take a look at them. I guess they raised their subscription. Yep, there it is. Boom, $511. Nice, nice. All right. So they're saying, look, we have pricing power. Well, we'll see how that works out for them, right? Again, it's kind of funny, we didn't pay too close attention to it because, earnings came out, we didn't care, they're just part of the fangs. But look at the structure that we had in place, right? Which way is it pointing? Pointing down. It's pointing down. So what do you think the next move is going to be? Of course, it's going to be up, right? Textbook. Textbook. Where's the potential area that it goes next? All right. This peak, close the gap. Very likely. Very likely. There's always a reason that markets move, right? You don't always find out why, but especially at the moment. All right, let's get back to our S&P. I'm going to be right back. I have to do something really quick. Might be about 10 minutes. All right, be right back.
Mic off. Mic on.
All right. Sorry about that. Had to attend to business. All right, so we got stopped out on that one. Okay. Um, Clearly went below. But look at the thrust up move since. Not very convincing. So what are we looking at now? Well, this is what comes to my mind, right? 10 minutes left to go in the training session. Let's see. Anybody have any questions? Giza. Sup, Giza. What's up, Crispy? Crispy $100 bills. Or in your case, pounds. Let's take a look at bonds. Yeah, they are. Yes, they are. Yeah. All right, tight broke. What are we seeing now? Bouncing off, 1, 2, 3 up. Okay. When you see a sharp 1, 2, 3 up, because they do occur, then what you expect is some kind of F flag or bear flag, and then another one up. Okay. In this case now, if it doesn't make it to the top, what does that signal? Weakness. All right. So it certainly does have the potential to go a little bit more. You get some kind of weakness up here. Price comes up, something like this, and then boom, fails. Double top. Right? Structure is pointing one way, price goes another way. That's why I'm telling you, we're not out of the woods yet. This is an interesting move to the upside for sure. Right? We can actually make an argument like, look, it wasn't even weak enough to come all the way down here. Right? That's bullish. So, a lot of mixed messages. We understand the bigger picture. This is just noise within it, within this bigger structure. So, I keep thinking about it. I keep looking at it different ways, but you know, let it go. Let it do what it's got to do. All right, VIX coming down. No, this thing, I don't want to do the drawing, and I have to keep click and right click. I have to do it several times, otherwise I have to get used to the other one. All right, so let's get back to the S&P. We got 7 minutes left to go in the trading session. Nasdaq up 2%. Remember, that's 2% is the normal abnormal high, right? Extreme. It's a limit, if you will. It's like a speed limit. All right, so you guys see the structure? Da, yes. Valid, yes. Which way is it pointing? Up. Which way is it likely going to resolve? Down. So we got this. We got the correction from this. And the next move should be this. Got the hook, got the 3 points, got the 4 anchor points. Remember, when you don't know what it's doing and you can't kind of quite figure it out, wait. Wait. Don't try to overanalyze. Certainly don't take every trade. Take the really good ones. Take the real good ones. The ones with the really high probabilities. Now, the one I showed you today was just an example, obviously, but, you know, to illustrate how risk reward works and so forth. You see it? I'll move it over. See it? One, two, three. Broke the previous high. Double top. Down. Again, minute chart, but the same applies on a monthly. All right, finding support at the trend line. I'll take this one to the short side. All right. There's 3 minutes left in the trading session, but if it breaks, right, because of the void here, let's pretend it wasn't going to be the close, then, you can take the trade. Not that I would actually in real life take it with 3 minutes left in the day, but I'm just, again, illustrating the point. All right, we're going to stay on a little bit longer today just to see what the market is going to do with these earnings. Building that consolidation at the bottom here, right? There goes the break. Come on, baby. Come on, bitch. Oh, he said bitch. He's not professional. 2 minutes left to go. I'll take the short. Magic, right? It's like magic, this fucking thing. Here's the previous low. Breaking the previous low. Now I would put this to break even. Okay. Because again, because what we're looking at now is a 1, 2, 3 down, right? So it's a 1, 2, 3 down. How far does it have to go to be considered a wave 3? Not not much at all. Okay, not much at all. You can just break the previous low because remember the break occurred here. This is where the break occurred. The fact that there was another trend line below it is a different story, right? So if it can come right down here, that's a wave 3. That's good enough. I know that sucks because we don't know when a wave is going to end. All right. Okay, into the close, 4 o'clock. There you go. Right? We got that move down, and that's your risk reward. Do you have to wait till it comes all the way down here? No, you take a little bit of profit now. We saw the void, right? It's not like the void wasn't there. We had identified it way before. Up here, back here, 30 minutes ago, we knew that there was a void here, and if price were to come in here, it would just drop right to the next uh, area. All right. You get my point, as they say in the Middle East. You get my point. You understand? All right. That's it. We'll wait a little bit, see what the market is going to do with the earnings. Again, don't be placing, you know, crazy bets. Wasting your time if you're doing that. You're a degenerate gambler. Yep, exactly. Kaboom. We've made how many trades now? Live? I mean, obviously this was just a demonstration, but you can see how it works, right? If I can't prove it to you dynamically, then you shouldn't listen to me, right? Believe me, to do that is a lot harder than after the fact. Oh, let me tell you what this did and that, and this did this and that. That. Yes, on Monday morning, everybody's an expert. Believe me, everybody's so good with hindsight. Oof, they are amazing. How about doing it dynamically? Oh, different story. Different story, Habibi. All right. If anybody sees what the number is before me, please post it. Okay. That's one of the benefits that we all work together for a common cause. By the way, just reading here, UBS cash levels in the U.S. have risen by 4 trillion since March. Insane, insane. And what do we get for it? Where's all the economic growth? Fantasies. Nowhere. Government debt equals our savings. Yeah, I'm stuffed with savings, my friend. I don't even know what to do with them. All right, Amazon, 12.7. Spike up, big fuckery move, and right back down. Thank you very much. You see, algorithms, algos. Before you can blink, it's already went to $3,310. It came back to 3,241. Before you can blink. And you guys want to go out and speculate like that? Not that you do, not that all of you do, but all right. 32.10. Where's the point of control? 31.91. Right? And that's from the high back here. That's what we're measuring, right? So let's chart this. Went right to resistance. So clear, right? Right to resistance. Broke just a little bit above it and boom, straight down. We'll draw it like this since it hooked. So that's the down move. First counter trend. 1, 2, 3. Which way is it pointing? This way. Which way is it likely to go? This way. Duh. Look at that. Right to the bottom of the structure. Right? Right at the bottom of the structure. It's like magic, this thing. Google 16 versus 11. Let's take a look at Google's. To the moon, Alice. All right. So where's the likely area of resistance? Previous high. Okay. This one, again, you can't really chart. I mean, it looks funky, right? It's not even valid. Right? Megaphone. See, it's not valid because the first counter trend move was somewhere down here. Right? This was the last lowest point, so it would look like this. Megaphone is worthless. It's confusion. Right? It's a big megaphone. Let's give it another couple minutes. How much is the move up? Only 10%. Did I say 10%? Yeah. Just like that, it's down 7%. 3% lost in one tick. Degenerate gamblers. Oops. Why isn't Google here? What the hell did I do? No. Okay, so it went from 10%. Now it's down what? Let's see. For some reason it dropped out. It went all the way up to 10%, and now it's down 6%. So it lost 4% in 2 minutes. You know how many people ran out and bought? 10%, 8%, 9% up? They're already down. Let's see what Amazon is stuck at the bottom of this trend line. It's actually breaking a little bit. Right, they both beat, and where's the movement? Right? What's the Nasdaq doing? Mm, look at that. Magic. Right? Magic. Back into structure. This is a big old fuckery move. Big old fuckery move right there. See that void? Right through it. Right through it. As if it didn't even exist, that price. Right? Yeah. Amazon is drop post market, right? Right. Understanding the chart, guys. Understanding the chart, man. I'm telling you. You gotta listen. I'm trying to teach you something good here. Don't be 60 cent uh, cent a day losers. Right? Calm down. Subscribe. Patreon.com/RealMacro. Right? 24 hours a day live chat. More content. What is this? What is this? Tight, 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 tight. Poof. Yeah. Go back in the videos today. See what I told you. Yes, I have to do 700 push-ups a day, Lena. Yep. I'm going to do 20,000 a month. And I'm going to wake up 4 o'clock in the morning and take a cold shower and then go running naked in New York City in sub-zero temperatures. Because I have to have mental game and toughness. I'm just good like that. You know, you guys are all wussies. You're all weak. Just kidding. You're 60 cent a day losers. All right, one more look at the fags. Amazon. Oh, yeah, beautiful. It bounced, right? A little bit. Is it just me? No, it's still at the bottom there. What did they do? Shut it down or something? And Googs, what did Googs do? Up 6%. Isn't Facebook reporting? How did I miss Facebook? What did Facebook do? Anybody? So Facebook closed somewhere here, I guess. Went straight up 6%. Kaboom! Down 2.4. Huh? Wonderful. Megaphone. Confusion. Mass fuckery. I remember those days, man, so crystal clear because I was happy for a, a millionth of a second. And I was like, it's up. And then the rest of the second, holy fuck, in slow motion, kaboom! And just kept on going. And then I would start playing mental game. And I went from a trader to being an investor and blowing out my accounts. Don't do that. Don't do that, please. Don't do that shit. All right? Please. And as I always say, you either listen to me or life will teach it to you. It's up to you how you want to do it. All right? All right. So Amazon is stuck at the bottom of the channel. This is likely going to go lower. Okay. Uh, Apple is back to, I don't want to say back to. It's, yeah, back to. All right. What they're trying to do, they tried to go higher. How good of a job did it do? Not very. It failed. All right. Is this enough of a hook? Yes. Expand the structure. It's right at the point of control. Let me take the all-time highs. Right at the point of control. Okay. Netflix. I pushed higher. Google. Right back down. Now up 4.4% for the day. But again, you got to remember there was guys buying at 10% up. So this is a 60% decline. Shit. Again, I remember those days, I swear. Crystal clear. Nvidia is down. Tesla is down. Oh, this is so close, man. Oof. Oof, I can taste this one. Tesla is so close to just blowing up. Yeah, I think whatever was holding the market up till now, I think that shit is going to be is going to blow up tomorrow. Yeah, that's what I think. I think there's a high probability, right? Because you're seeing these big tech companies, they're beating the whisper number, and they're being sold off. I mean, even if Google were to go up 10%, when you have Amazon coming down, you have Netflix coming down, and then, popping a little bit, it's not enough, right? It's not enough. Not enough. All right, that's it, guys. Thank you very much for hanging around. I hope you guys are learning something. Please don't forget, like, subscribe, all that good stuff. If you want more, come down to patreon.com/RealMacro. All right. And again, thank you for joining. We'll see you tomorrow. I'm not sure if I'll be in the morning. I might be interested to do that because, the probability is that now that they reported that the market could tank, and I want to be around for that. Okay. I want to have some fun with that. One last look. It's closed, the market, but look for this to push lower. Okay. For now. Um, it didn't even make it to the top, huh? Doesn't mean it still can't. Don't get overly bearish. We're only bearish because we're within the structure that's going down. But it didn't even make it to the top here. So that's another subtlety that, you know what? This thing is still weak. Uh, so into tomorrow, I expect this to come down to the point of control. And then we'll go from there. All right. Thank you very much. Have a good rest of the day. Have a nice sleep. Talk to you soon. Bye-bye.